Liam sits at the kitchen table in October with a shoebox of receipts, sorting them into piles. His work bag receipts, a stack of parking tickets, a folded map, and a crumpled printout of last year's return, all going into their own separate little piles across the table. $298 in deductions counted up so far this year, according to his own rough tally. He is not stressed about any of it, not even slightly. He has heard the number 300 his entire working life, the way you hear a road sign every day without ever actually reading what it says, and never once actually asked himself what happens on the other side of it. Because that number is not a discount, and it is not a spending limit either. It is a line, drawn precisely, and the moment you step over it, the entire rulebook changes for every dollar you are claiming, not just the $1 that pushed you across it. There are 4 levels of deduction in this country, and the ATO treats you like a completely different taxpayer at each one. Same job, same pile of receipts, same kitchen table in October, every single year. What changes is how much proof you actually need to hold on to, and exactly how closely somebody's going to look at it. Level 1. Liam's total work-related claim sits at $280, comfortably under the $300 threshold. This is the level where almost every casual and part-time worker in Australia genuinely lives, and it feels genuinely safe because the ATO's own guidance formally calls it a substantiation exception, which sounds a lot more official than it turns out to be in practice. At this level, Liam genuinely does not need a receipt for every single item on the list. He simply needs a record, something like a diary entry or a spreadsheet line, showing how he actually worked the number out. But he does need to have genuinely spent the money in the first place, and be able to explain the figure if he is ever asked about it. So the $280 sitting in that pile is real, it is fully claimable, and the paperwork burden attached to it is genuinely light. This is precisely the level the $300 rule was originally built for, and right here it works exactly the way most people quietly assume it always does everywhere. Level 2. Liam adds one more item to the pile. One pair of new steel-capped boots, $22 exactly. New running total, $302. $2 and nothing else about the pile has changed. And here's what actually happens next, because it is not remotely what most people picture when they imagine crossing that line. The ATO does not simply tax the $2 extra. It requires written evidence for the entire $302 claim. Every single item on the list, the parking, the tools, the boots, all of it, each one backed by a receipt or an invoice, not just the $22 above the threshold. The whole $280 underneath it gets reclassified the instant the total crosses the line. So the genuine real cost of that $22 pair of boots was never actually $22. It was the loss of every exemption Liam had been quietly relying on for the other $280. One purchase on one ordinary Tuesday, and the entire substantiation standard flips for the whole return. This is the mechanism worth actually naming, because it quietly explains almost every dispute the ATO ends up having with ordinary taxpayers. Call it the threshold cliff, because that is exactly what it behaves like. Below the line, the requirement quietly scales with whatever you are actually claiming. Above it, the requirement jumps straight to maximum, all at once, applied to the full amount rather than the excess. It is not gradual, and there is no ramp built into it anywhere. A single dollar of difference in what you actually spent produces a completely different legal standard for what you now have to prove, just to keep the whole deduction standing. Level 3. Liam's total claim climbs to $1,500. And here the rules stop being general and start being specific to exactly what he bought, item by item. His car used for work has its own entirely separate test, running completely apart from the $300 rule that governs everything else. The cents-per-kilometre method needs no logbook at all, which sounds generous, but it caps out at 5,000 kilometers a year. Beyond that 5,000 kilometer cap, only a proper 12-week logbook justifies the claim. And that logbook genuinely has to be current, kept recently, not the dusty one Liam filled in 3 years ago and then completely forgot about. His laundry expenses have their own carve-out too, up to $150 with no receipts required at all. But that allowance sits completely outside the $300 total. It does not get added to that total, and it does not get protected by it either. It is its own separate island. And if Liam works from home some days, the fixed rate method demands something most people have genuinely never heard of before, a contemporaneous record. Not a guess made in July about how many hours he probably worked from the study back in March. An actual log, genuinely kept in real time, day by day, as he actually went about his week. 3 entirely different expense types here. 3 completely different rule books governing each one, and none of them talk to each other in any way. Passing the $300 test tells you absolutely nothing whatsoever about whether you have also passed the car test, the laundry test, or the working from home test. Level 4. Liam's total claim reaches $11,000. And this is the level where the ATO essentially stops looking closely at his individual receipts and starts looking instead at his entire occupation as a category. Every single industry and occupation in this country has its own benchmark. The average electrician claims around this much, the average nurse claims around that much. The ATO's own data matching systems quietly compare Liam's return against everyone else who ticked that exact same job title on their tax file that year. Sit meaningfully above that industry benchmark, and the review does not usually start with an accusation of any kind. It starts, quite plainly, with a letter, asking Liam to explain one specific item, how that particular deduction was calculated, and exactly where the supporting evidence is. Answer it properly, with the actual records ready to go, and most of these reviews end right there, without going any further. Answer it late, or simply not at all, and it can genuinely escalate into a full audit, backdated amendments reaching back across several years, and penalties calculated as a percentage of whatever tax you were trying to avoid in the first place. Now, at this exact point in the video, a reasonable person is already thinking something specific, and it genuinely deserves a straight answer rather than a polite dodge. You are thinking something like this: since the whole claim gets scrutinized the moment you're over 300 anyway, why not just round every expense up a little while you're at it? If they're going to check the paperwork regardless of the total anyway, you may as well make the number genuinely worth checking. Here is why that reasoning fails. The written evidence requirement is not some formality you clear once and then forget about. It is proof of an actual transaction that genuinely happened, and inflated figures without matching receipts are exactly the pattern the ATO's benchmarking system was built to catch. The 3 golden rules apply at every single level of this ladder. You spent the money yourself, it relates directly to earning your income, and you can actually prove it. Fail any single one of those 3 tests, and the deduction gets disallowed entirely, whether you are $2 over the threshold or $11,000 deep into a claim. So that is the ladder. Under $300, the ATO is genuinely lenient about the whole thing. The moment you cross it, every dollar you claimed needs actual proof, not just the excess amount. Above that line, car, laundry, and home office all run on their own separate rules that do not protect each other. And well above your occupation's benchmark, the ATO effectively stops trusting your paperwork on its own and starts asking you to explain it in person, directly. So the number actually worth remembering here is not $300, it is the cliff itself. That single line is what determines whether October costs you nothing more than an afternoon with a shoebox of receipts or a letter you genuinely did not see coming. Tell me in the comments whether you already knew the $300 rule covered your whole claim once you crossed it, not just the amount sitting over the line.